This is a company that does not have pricing power. You have no PP here. PP very, very small.
Is going to be a default on the debt.
Carvana is going bankrupt, for real this time.
That was 4 months ago. That's also when I said this.
They really should be able to become profitable in the coming year.
Of course, as soon as I said this, the stock tanked 50% from $8 a share to less than $4. My comments blew up. One dude went as far as to call me a clown on the internet. So who was right? Drumroll, please. Turns out every major YouTube pundit was wrong about Carvana. And here's how I tripled my money on Carvana, thanks to those YouTubers. Hi, my name is Maaiz. I'm a hedge fund analyst turned entrepreneur, and this is where I share what I'm learning about investing. So before I get into how I found Carvana and invested in it, why was everyone calling for them to go bankrupt? If you haven't seen my last video on Carvana, you can check it out here, but I'll go through a quick overview of the drama around this company. Carvana, an online used car retailer in the United States, went from $375 a share to $4 a share over the course of 18 months. Let that sink in. This company lost 98% of its value, over $100 billion in market value. Why, you ask? The whole used car market had been extremely profitable and growing, thanks to the supply chain issues caused by COVID-19 that killed the production of new vehicles. That all started coming to an end as interest rates increased and the economy started to slow down. As the company started to slow in its growth as a result of this larger economic change, focus of investors also shifted from growth to profitability, and Carvana's future profitability became less and less clear. They had never really focused on profits. Given they were growing so fast, profitability was secondary, just given how large their market was. Many investors, short sellers, and YouTubers just assumed that Carvana's business wasn't sustainable, like many other e-commerce businesses that had gained massive popularity during this time. The problem was, these pundits did not do their research. They parroted the same sound bites and cherry-picked the same website screenshots to prove their thesis that Carvana was going bankrupt, instead of actually doing the hard work to come to a conclusion from the actual data. Turns out, if you had done the research on Carvana like I did and some others did, you would have seen the writing on the wall. Carvana stock was too cheap and the market had overreacted. I bought in a few days after I published my last video at $8 a share. So how did the company turn the tide and 3x their stock over the course of the next 6 months since my last video? The CEO and Carvana team did exactly what they told their investors they would be doing. They reduced costs and became profitable. They focused on execution, and in their most recent report, they revealed they're going to make $6,000 in gross profit per car sold and $50 million in adjusted earnings. While the company did their job, the market also realized all of the terrible stories about Carvana were really just rumors by non-credible pundits cherry-picking data. At one point, Carvana lost 20% of its value in one day, thanks to a rumor that the people they had borrowed money from were talking about what they would do if Carvana was to go bankrupt. And of course, no sources were cited for these articles. I mean, it does sound really scary. It's not just investors, but debt holders thinking Carvana might go bankrupt too. But yet again, even if that story is true, it doesn't mean Carvana is going bankrupt. It just means somebody's talking about it. Carvana turned out to be the definition of a buy when there's blood in the streets stock. Investors lost all sense of reality and sold the stock into oblivion, often based off of unsubstantiated rumors. If you were buying knowing it's an overreaction, you could have 6x'd your money from its lows near $4 a share at one point. But now that Carvana has rebounded to over $25, the real question is, how does one find more stocks like this? So let's jump into how I found Carvana and how you can find other stocks like it. First, in order to do this really well, you have to find other contrarian investors. Carvana came on my radar after I dove deep into the incredible investor Cliff Seessel. He makes his money by investing in stocks that he believes the market has unfairly beaten down, often with short sellers on the other side of his trades. You can see his holdings at dataroma.com and do your research from there. The best part about his investments is that they are big bets. He only invests in 3 to 5 stocks at a time, so you know when he's bought, he's not just messing around. Rather, he's got real skin in the game. There are some great Twitter resources in the space as well. One that I really recommend if you liked Carvana is Indra Stocks, INDRA Stocks. He's done the hard work of pulling apart the bullshit peddled by short sellers trying to tank stocks like this. His analysis on Carvana has been spot on so far, and he's got some really interesting things to say about one of Cliff Sosin's other holdings, Cardlytics. Let me know if you want to hear more about that in the comments below. Third, you want to do what Michael Burry started his hedge fund career doing, finding stocks hitting 52-week lows and researching them more than anyone else to find the diamonds in the rough. To dive deeper into contrarian investing, take a look at my video on the techniques Michael Burry used to make his first $1 million investing as a hedge fund manager.